Good afternoon. Welcome to another episode of the Multifamily Minute with Old Capital. James, what is the debt service coverage ratio?
So for short, this is a four-letter word that lenders like to use, DSCR, okay? And DSCR is how Fannie and Freddie really look at a property and determine, okay, how much can I lend against the property, right? So they want to see a cushion of typically 125. So if your NOI is, let's say 125,000, your debt service is 100,000, that's that. If you divide those two numbers, you get 125. So based off of that, they can determine what your loan amount's going to be. And so a lot of times on Fannie Mae and Freddie Mac, they're only looking at in-place income, and then they're going to look at pro forma expenses. So when you underwrite the deal, you take the T3 net rental, T12 other income, and then typically pro forma expenses, and that's going to determine what your NOI is, and that'll determine what your loan amount is.
Is there any exceptions to that rule?
Sometimes there could be some exceptions, right? So like we've seen it on properties where they see, all right, real estate taxes are maybe 30 to 40% of the purchase price, so they're going to bring those up, right? But then let's say you had a water leak at your property and you fixed it, right? So instead of using a T12, they might use T3,
T6.
Yeah, T3 or T6 on it. And then another thing to consider is in some markets, they might even go a little bit lower. So they might go to like a 120 in major markets.
If it's a strong market.
If it's a stronger market,
yeah.
To be more competitive.